As the 2016 ISA season kicks off in earnest, the UK is facing an array of headwinds. Markets have been jittery from the first day back at work after New Year, China, Brexit, economic growth, interest rates, commodity rout, banking sector fears, all providing a veritable soup of uncertainty for markets and therein investors. The question of how investors should make best use of their allowance for the 2016 ISA season is more challenging than it's been for the past 7 to 8 years since the financial crisis. Cash ISA investors continue to grapple with record low rates, while their stocks and shares counterparts face the prospect of diminished returns and capital erosion amid stock market turmoil. Despite the arrival of spring, the outlook for investors looks gloomy. The weaker expected annual spike in sales for asset managers and banks adds to the trending decline in the number of total yearly subscriptions for both cash and stocks and shares ISAs. Meanwhile, UK financial advisors face their own set of challenges, chief of which will be demonstrating their value in a market where online and direct providers are starting to tighten their grip. Indeed, the latest report by CoreData research into the ISA market, which surveyed 3,000 investors in the UK, underlines the stiff competition advisors now face from online brokers. The report reveals nearly half of investors, 43%, now go to an online broker to buy their stocks and shares ISA. This is now the most popular method of obtaining a fund ISA. The disinclination to seek advice is especially pronounced in London, with just 9% of investors in the capital acquiring their fund ISA from a financial advisor. Just 16% of fund ISA investors rate their provider as very good in terms of fees and charges, and only 16%, 21% and 21% of cash ISA subscribers, respectively, afford their provider a good score in terms of both consistency of rates and competitiveness of rates. These low satisfaction levels suggest the fee arena could be the key battleground going forward, giving businesses an opportunity to carve out a competitive edge. Meanwhile, the industry as a whole has its work cut out when it comes to attracting young investors. The CoreData report finds that just 8% of 18 to 35-year-old investors have a fund ISA. And in terms of net investable wealth, just 21% of mass market investors hold a stocks and shares ISA. Subscription rates are highest amongst high net worth investors at 81%. On the regulatory front, meanwhile, 2016 could be a landmark year for ISA savers. April will see flexible ISA rules come into effect in addition to the launch of the innovative Finance ISA. And with a possible announcement of a pension ISA in the March budget, the ISA market could look very different over the next few years. The ISA is clearly at the forefront of Chancellor George Osborne's efforts to overhaul the UK's saving culture. It will be interesting to see what impact the expansion of the ISA into the housing, peer-to-peer lending and possibly pension sectors will have on the market. So the question ahead is whether these reforms will help improve the appeal of the ISA and rejuvenate a somewhat stagnating market.